Hi, this is Tim Dial with Nexa Mortgage, and I just wanted to, I just did a quick update that was pretty short yesterday, and normally I don't do 2 days in a row like this, but I wanted to go ahead and put another update on there because we have some important sort of technical levels that are going on that are going to impact the mortgage industry, I think, over the next few days or possibly week, possibly 2 weeks even. So I wanted to go over this stuff pretty quickly here and get into it pretty shortly. I'm going to go ahead and share a screen because it's going to make a lot more sense if I do so. And so you should be able to see my screen now. And so when you look at the S&P 500, down 537 points on the day today. And since the beginning of April, I think it's been like probably over 3,000 points at this point that it's dropped. And so we were approaching this important technical level, and we just sort of went past it today, which is something that's referred to in the market as what's called a death cross. And so what happens with a death cross is when you have this white, which is the 50-day moving average. It's this white line that you see here, and you see it keeps declining. The 50-day moving average keeps declining, and you have this 200-day moving average, which is a longer term or longer moving average that's blue, and it's right here. And whenever the 50-day moving average crosses below the 200-day moving average, they call that a death cross, and it usually signals a bigger sell-off by the market. As you see, they're continuing to sell off, right? And so I'm expecting this sell-off to continue probably over the next few days. Now, there are certain things that could happen in the market that could change that, right? So, like, if there was some sort of announcement that we were ending tariffs and stuff like that, obviously that would have some sort of an impact on the markets, and that's something there's no way to know what's going to happen there, what the administration might do moving forward. But just if things stay the same and stay as they are, this is probably going to signal a bigger sell-off over the next few days or possibly the next week or two. And we're going to see this white line continue to decline as this blue line stays fairly steady. And if that happens, whenever there is a sell-off like that, whenever there's a death cross like that, typically that's going to also signal more buying in long-term mortgage bonds. You see, we gained 22 basis points today, and we had a rough week last week, but we've made some nice gains these last 2 days. So if this continues over the next few days, we should see this be back in this range. And that's what I'm kind of expecting if this continues with the S&P 500 continuing to drop because of this 50-day moving average continuing to drop. Then we're going to see this number continue to go up. And if that happens, if this continues to go up, as this goes up, interest rates come down. So we should see an improvement in rates as this gets back up into this range. We've already seen some improvement in rates, but we haven't made up for last week's losses yet. So, but by the end of this week, I think we will make up for last week's losses and be in a much better shape. So anyway, I just wanted to cover that pretty shortly here and go over that in a little bit of detail. Didn't want to spend a ton of time on it, but a lot of people don't really pay attention to these technical levels and stuff like that or what it means. And I follow the rates pretty closely because that's sort of my job. So anyway, that's pretty much it. Hope you all have a great day. If I don't post something before then, have a great Good Friday this Friday, and happy Easter. Thanks.